top-down analysis is, let's find a random pair. Your top-down is you literally starting at the higher time frames. Okay, so the highest really I would recommend, or well, it's a personal preference, but the one I would go off is the daily. Very, very rarely like go off the week or the month unless you're happy to hold trades for a long, long, long time. Yeah, it is good to have a look at it to see where the banks are trying to get to, what the overall targets are. Yeah, so it does matter on higher time frames. But yeah, we'll start on a daily. All you're doing really is just marking out stuff that will work on every time frame. Yeah, such as POI, which is points of interest, or imbalance, improper price action, which I'll cover in another video. Usually just off the daily, we're just looking at what price is trying to do. Okay, so just trying to find something that's quite easy to follow. Yeah, maybe we can go off this. Okay, so top-down analysis, we're on a daily time frame here. We can see, so from this point down to this point here. Yeah, and if you want to make it even easier for yourself, if you wish, make it a bit darker so you can see it. Yeah, so you've got some kind of channel, okay? Yeah, so price is kind of staying within that channel. Don't overly worry about stuff that comes out of the channel because you're never going to get a penny perfect chart, really, okay? But we can clearly see the price is pushing in a bullish market, yeah, in a downward movement, yeah, until we break this area. Yeah, we're going to be bullish. Yeah, so price may well do this up to here. As soon as it breaks here, creates a new high, creates a new lower high, and then a new high again. That is when it's broken structure. Okay, so market structure is very, very, very important. I mean, very important, super important. Yeah, without market structure, this is a bit like core foundation of a house or a building. Yeah, you need core foundation, you need structure to it. You can drop it down to the 4 hour then. Yeah. Now. So let's go back to the daily. Okay, so on the daily, let's drop down to 4 hour now. So within the daily, you have, so let's just say that the daily is the major trend, okay? So within the 4 hour, you will have minor trends, okay, that obviously go in the sort of opposite direction, if that makes sense. Yeah, so you can see here, obviously, it's creating low, high, new lows, new highs, a low. I didn't quite create a new low, right? So therefore now we're pushing down in a bullish market. Yeah, so this broke structure, so this price action here broke this. Yeah, so this would be now classed as a bullish. Yeah, it's create a new low, a new higher low. It's just followed, push down again, okay? 2 hour, you just keep on going and keep on going, okay? Top-down analysis is not overly important. It's just getting your overall trend direction, really, which way the market is going. You know, if you fell into a river, and this is my fancy river. If you fell into the river and the waves, the tide was going this way, would you try and swim this way? I wouldn't. Yeah, go with the flow, right? We need to go with the flow. So yes, we understand there's pullbacks in the market. but you just got to understand how to use them in the correct manner. Yeah, there is ways that you can do it, and we all know the market needs to pull back to be balanced. But you should usually go with a trend. Everybody says trend is your friend, right? So this is pushing downwards. I mean, selling, bullish, downwards, yeah. We should be looking for sells, ideally, yeah. There's nothing wrong with going against it and buying up. There's nothing wrong with that at all. Yeah, but the overall trend is downwards, and that is the top-down analysis, daily, 4 hour, 2 hour. Usually what we like to do is just halve it. So obviously if you look at the 4 hour, you drop it down to 2. So obviously half of 2 is 1, and then drop down to 13 and 15 and so forth. Okay, but like I say, it's not overly important, but you just need to be aware of these